Hi guys, today's Wednesday, it's the 15th of April. My name's Adam Hebener, I'm the CEO of Modern Mortgage, and this is today's Modern Minute. And guys, I'm glad to share this one with you because it's one of these moments where the behavior of the financial world gives a clue into kind of the best way that average individuals should be acting. I love opportunities like this because when we see large-scale financial decision makers making decisions that can apply to everyday Americans, there's a lot of value in paying attention to what's happening. So let me fill you in. We've been telling you all about the systemic risk in the mortgage industry. You'll see it in past Modern Minutes, and you'll see it probably most specifically in the webinar we did for you several days back where I described the liquidity cycle and taught those folks exactly how liquidity works in the mortgage market. We also told you that because of some changes in the CARES Act and because of the fact that FHFA and the powers that be at the Treasury Department and Fannie Mae and Freddie Mac are really not interested so far in providing support to servicers, because of that, there is a systemic risk that exists. Now, here's what's really interesting. Because we're seeing that kind of lack of interest in supporting the systemic risk, you're seeing all kinds of banks, from big and small, take very similar action. And the action they're taking is the kind of action that all of us can learn from. The action they're taking is they're putting their own financial houses in order as much as they can by focusing first on risk mitigation. Now, that's super important. That's a clue for all of us to learn. I want you to know if the big banks, probably the most famous of which at this point is Chase Bank, fourth largest mortgage lender in America, has now said they won't take any transaction, whether it be FHA, VA, government, Fannie Mae, Freddie Mac, any kind of deal. They won't take anything unless the client's got a 700 or above FICO score and unless they're putting down 20% or more. Now, those are major moves to try to support only the portion of the market that provides them the least amount of risk. So what they're doing is kind of cleaning up their house because they are concerned that the feds aren't going to do that. Now, other banks have gone even further. There's lots of banks who have notified us, hey, we're not even lending anymore. We're not going to lend anything. We can't afford to take on a single dollar in risk. That's a big deal. Now, those issues aside, there's a lesson there I think that's valuable for all of us to learn, which is something that I've shared with you in the past, and that is as the bigger the world gets, the bigger the things around you are, the bigger the forces are, the more important it is for you to be really just seeking to be in control of your own house. Keeping your own house as your primary focus is actually the very wisest thing you can do, and that's even iterated all the way up to some of the biggest banks in America. The fact that they're taking measures to protect themselves and they're pretty good at risk mitigation tells you that you should be doing the same kinds of things. So you say, well, how do I do it? What should I do? Well, gosh, I'd like to talk about just about every category of life, but I'm just going to focus on finances for now. In the category of personal finance, the most important thing you can possibly be doing is getting your house in order. So let's talk about what that looks like. The very first thing it looks like is the same thing Chase and NewRez and all kinds of other big banks and servicers are doing, and that is you're going to reduce new incoming risk. So here's how you do that. Obviously, if you haven't stopped spending, it's time to stop spending. If you're still kind of thinking, hey, this thing's going to be over in a week or two, we'll be back at work and everything will be fine, I want you to know it's going to take much longer than that. The knock-on effects of the economy are really now only just beginning. We haven't yet priced in things like $20 oil or less than $20 oil. I just want to ask you one question about just that one category. Just think of all the folks employed in the oil industry. Well, most of the United States oil produced through fracking and shale oil and other means really relies on the price of oil being around $30 or $35 a barrel. If it stays at 20 for very long, and all indications are that it is not only going to stay at 20, but could very likely go down, if that happens, what happens to all those jobs, those high-paying jobs? You probably see something similar, but even more greatly affecting the economy than what we saw in, say, movie theaters and retail sector and restaurants. I explain that to say you're going to continue to see greater and greater knock-on effects. And so if you're spending, for instance, like this is a short-term phenomenon, I have to tell you, it's time to stop doing that. You've got to take a cue from the big servicers and start to get your own house in order. So let me give you a couple of tips on that front, things maybe you haven't thought about. It's a really, really wise time for you just to kind of pull out a piece of paper and start writing down the things you're spending money on. And as you do, 100% of those categories should be things that are now up for discussion. And the discussion should sound something like this. Is this a necessity? If so, where in the scale of necessities does it belong? Is it number 1? Is it number 2? Is it number 3? And really get clear on what your spending priorities are. Now, once you've done that, look at the costs of the expenses themselves. Things like cell phone bills and all kinds of cable bills, everything you're paying for, internet, every service you're receiving. It's wise, actually, for you to call the provider of that service and simply say, I'd like to renegotiate. We're in a tough time right now. I know we have a contract, but I'd like you to consider taking less. Believe it or not, many, many corporate entities are responding to that. And if you can make it your goal to reduce your spending by 30%, 40%, 50%, whatever it might be, you're going to be taking measures that really protect you as we continue to walk through this process. Now, we're going to make it through the process. You've heard me talk about that why. I'm going to be presenting to you pretty soon in a new webinar what I expect things to look like, kind of some of the things you can plan for coming in the future. We're not opening that up yet for RSVPs, but we'll be doing that soon. But I want to let you know, when we start talking about what the new rules of the game are going to be and how you're going to want to be positioned to take advantage of that, as we kind of go into that conversation, one of the most important steps you're already going to want to have done is that you have really gotten control over your spending plan. Now, why? Why do I have to do that? It's not just because it's time to tighten the belt. Some axiom like that doesn't serve you. It's because when you reduce what goes out, you improve risk. And so since there's risk to you outside of your home that you really can't control very much, the only thing you can control is the risk inside your home. Now, not only is that a powerful muscle for you to build as we begin to start to put the bricks in place to be building, but it also gives you kind of an emotional stability that really allows you to feel empowered and feel strong about the direction that we're going to be headed soon. That's important. That is optimistic. That's action you can take that is wise. And you know, we're always talking to you about wisdom and trying to help you grow in this so that you can really improve your life in every possible way. So remember this as we walk through this process. Take a note from the biggest banks. When systemic risks exists outside of your doors, the only way you can mitigate risk is to mitigate the risk inside your doors. And that's a very powerful thing you can do. I hope that encourages you a little bit. Keep watching for some of the stuff, the tips and tricks we're going to be sending you to help you do those things. And continue to watch the news and some of the other information that comes out, hopefully with some of the new tools we've been giving you to interpret what's going on. And we'll keep making sure we're working hard to do that. In the meantime, if we can do anything for you, don't forget to send us an email, like, share, subscribe. Keep helping us get the word out with all we're doing. We're so excited to be serving you folks and look forward to talking to you soon. Take care. Bye-bye.